We welcome you to a very special Better Business Bureau webinar. Good morning. I'm Tom Johnson, Vice President of Public and Board Relations at BBB. What a treat. Today we have financial insights to help you navigate these difficult times from some of the brightest minds in Chicagoland. Here to kick off things for us today is our BBB President and CEO, Steve Bernas.
Thank you, Tom. Good morning, everyone. Thank you for joining us today. As you know, these are very challenging times for our BBB and continues to look for opportunities to help you. In fact, helping businesses and consumers is the heart of our core of our mission. The Better Business Bureau of Chicago, Northern Illinois is a nonprofit organization promoting marketplace trust and providing services locally for over 90 years to Chicago. The BBB seal is a sign of a Better Business Bureau, and we invite you to visit bbb.org for more information. Also, I'd like to thank a great partner of ours at the BBB, the Financial Planners Association of Illinois, for helping us create this financial panel section today. Today, we'll announce a book that we'll be distributing later today on ebook and how to help you with your financial information and needs. Today, we have three great panelists joined by nationally and locally acclaimed financial expert as our moderator. Along with writing a national newspaper column, Terry's the author of 4 best-selling books on finances and appears frequently on both national and local TV radio programs. On behalf of everyone at the Better Business Bureau, it is my honor to introduce Terry Savage. Terry?
Thank you, Steve. It's very good to be with you. I'm just delighted to be, let's see if we're up on screen yet, are we? Let's see if I push a button. I hope that works, but anyway, I'll let them put it together. I hope you're hearing me. I'm really glad to be here. We have a great program for you. 2 of my most favorite go-to people that are always on call for me when I'm writing columns. And then the expert from the Small Business Administration who runs everything that happens here in Chicago. So we hope to provide you with some great information. Let me just stop and check and make sure that we are all connected. Can you let me know?
Terry, we can hear you. We just need you to turn your webcam on.
Well, it was on before when you turned it off. Okay, here we go. There we are. Okay, now we're all here. Okay, so thank you again, Steve. I'm really delighted. I want to do a little caveat before I introduce our presenters today. These, as I said, are the best. They're the ones I go to when I want to write a column and I need expert advice. And so I want you to know that we'll be talking about specifics, whether it's about the business loans from the SBA or about financial planning or even estate planning, things that can help you perhaps get through this whole thing. So but we want to tell you that everybody's different. And here's the disclaimer that all good financial planners should make. You should seek your own financial advisor, your own CPA, your own attorney, but these should give you good ideas to bring to them. And with that, let me introduce our panelists today. Ed Jertson, would you wave your hand, because I'm not sure everybody knows who's who. I don't know if the names are up. Ed's a national past president of the Financial Planning Association. He's run huge conferences and organized them. He's vice president with Mack and Securities, a financial planning firm and money management firm based in Northfield. He's just very involved in client lives. You've heard him on WBBM radio. At the same time, I'm on WGN's Noon Business Lunch, but what can we say? We're out there giving lots of financial advice. And Ed, I want to come back to you in a minute after I introduce everyone and start with my first question, which I hope will throw you for a loop. And then you'll know who else is on there. The other woman on the panel is my friend Tammy Wenner. She is a co-founder of RW Financial Planning. That's a firm committed to providing objective, candid, and thoughtful financial planning advice on an hourly or project basis, which means these people are not ripping you off for anything. And a lot of people who call themselves financial planners do. I'm very big into this fiduciary kind of thing. Tammy's been in the business for 20 years. She does complete financial planning and estate planning and helps clients, both individuals and those that run small businesses. And then, this is really great. We started organizing this and I said, we need someone who knows the PPP inside and out and knows how these loan programs are working. Look what Steve came up with for me. Bo Steiner is the district director for the U.S. Small Business Administration's Illinois district. He leads the whole team focused on delivery of all the SBA programs, including all these latest ones, especially focused on small business. So we have a great team for you. Later on, you'll be able to click on the question box and send up questions. Our goal is to talk for a little bit and then answer your questions. And I can't tell how many of you are out there, but I've heard it was well over 100. So I think we should have some great questions. Ed, I was going to start with this because you're well known for talking about investor psychology, behavioral finance. So yesterday, the Dow was up like 1,000 points. We're well off of our lows. And the market, I'm going to look at right now, it's about even today. So my question to you is, wait, is it all over? No worries. The market says we're going higher. We're going to open up the economy. The drug people say we're going to have a vaccine. 2 or 3 companies may have it in mass production by the end of the year. And so should we all just heave a sigh of relief and say, hey, buy stocks, go back to work, no more problems?
Yeah, that is one of the biggest challenges, I think, is that, people are looking at the stock market and they're seeing instant relief. They're thinking, oh, everything is clear. But I'm sure a lot of you on this call and a lot of our clients are still suffering, especially our small business owners. So don't look at the stock market. Try not to read the news in regards to what's going on, because one channel will give you all the negativity and everything that's going on, and another channel will give you all the positive things that are happening. But at the end of the day, you're running your day-to-day business. And so these are times, as Steve had mentioned in his opening remarks, of incredible stress. I mean, not only stress in your families, your business, financial stress. And putting this panel together was just terrific, because the goal is to give those on the call information to be able to take those stresses, reduce them to sort of tangible elements to solve some of the problems facing them today, not necessarily 6 months from now.
Well, I'm going to come back and sort out the difference between personal finances and your business, but I want to get each of you on the record at least a little bit. So have we seen the bottoms, do you think? Just from a stock market, not from a how you run your business point of view, and not from a how will the economy reopen point of view. But you've got a 401k or an IRA, everybody out there hopefully does. Can we stop worrying about the market going down?
Hey, Tammy, you want to take that one and I'll take it after you?
Sure.
No, I want you on the record, Ed. So just give me a sort of, have we seen the lows?
You know what? The only thing that's going to be certain is uncertainty, right? So we're not. I truly believe we are not going into a depression because of all the financial safety nets that have been put in place. I mean, we have unemployment insurance, we have Social Security, we have all these things. The government, the SBA is doing everything they can to kind of keep the economy and capitalism going. So whether the stock market goes up 30% or down 30% in the next 6 months, to me, is not as impactful as what's going to happen. Will the Republic of the United States survive? Yes. Will capitalism survive? Yes. And so to have that long-term faith in the US and capitalism is important. So again, these short-term fluctuations of the market, as unnerving as they are, especially when it goes down, I try to keep people balanced in regards to what's happening.
All right, now don't worry, Bo, I'm not going to make you forecast the stock market. I'm going to jump right over to Tammy and ask you to start there. What are people, your clients, both individuals or people who own their own businesses, if they have time to think about the stock market, what are they asking you, and what was it like at the worst of times, and how do you feel about the market now?
Yep, I would say a couple of things. I think certainly the uncertainty has been a major factor for everybody, right? For those that have cash and can invest, should they invest? For those that are fully invested, should they get out now before it goes any lower? And so all kinds of conversations around that. And to be frank, nobody knows, to Ed's point, whether we're going to go up or whether we're going to go down. In general, I think if you are someone who is investing in the stock market, you are probably somewhat of an optimist and feel that the market is going to, and the economy is going to continue to move forward. And you have to kind of stick with the plan that you've put in place, understanding that it's not always going to go exactly the way that you anticipated that it would go.
All right, now we're going to stop with the financial forecasting because this isn't CNBC, and I love that I got the job as moderator, so I don't have to make a forecast. I want to put one business word up to you and ask you to talk about this before I go back to Bo. The word is cash flow. Maybe it's 2 words, but I like it. Cash flow is easiest down the drain these days. It's one thing to talk about investing and financial planning for the long run. But the thing that's happening right now is cash flow, and literally running down the drain and not a lot coming in. What does the role of cash flow play in the kind of decisions you make today in your small business?
I think it's pretty much everything. I think it's the one piece that of all of this economic stock market stuff that we have some control over, not complete control. And I think being mindful and honest with yourself, both in terms of your personal situation as well as your business situation, on what you're spending on and what benefit you're getting from what you're spending on, that is the key to so much of this. Because once you have a good sense of what you have to spend, what you like to spend, you can then kind of understand what revenue you need, and from there take it from a profitability standpoint. And again, that's whether you're a business and of course need profitability to continue your business, or on a personal side, understand if you're going to have to dip into accounts or take some other actions just to be able to maintain your, some semblance of your lifestyle.
All right, the source of cash flow today, I mean, aside from business, most businesses are hurting, if not closed and shut down completely. So the best source of cash flow these days, the best spigot out there, is the federal government, which leads me to you, Bo. Well, let me ask you this. There's so much to talk about, so let me start you off this way. Tell me 3 critical things to know about the PPP program, the Payroll Protection Program. Just the 3 top things you think people ought to know, and maybe there are mistaken ideas out there and so forth.
Sure. So I think the first thing is that, the PPP is basically a 100%, up to 100% forgivable loan program. So it is a loan, but if you use the proceeds appropriately and in alignment with the guidance that is available, which the forgiveness application actually came out last Friday, then that loan can be up to 100% forgiven, meaning that the federal government will pay that off on your behalf, which is an amazing tool to both, for business, because you can pay for some of those working capital needs that you have, but also to keep your employees on staff. So when things do open up, you're not having to go through this whole process of rehiring everybody, bringing them back, all those sorts of things. The second thing that I think is really important for people to be aware of, because I think a lot of small businesses got spooked by some of the language in the frequently asked questions about certification of need. Last week, the Treasury and SBA released an FAQ that any business that takes a loan of less than $2 million, that certification that the business makes, indicating that the uncertainty of the economy determines that they do need the loan, is the evidence that's required for that certification of need, just assenting to that, attesting to that particular comment. So I think that should make small business owners feel much, much better about taking the loan in the first place and
Before
not having to.
All right, before you go to point 3 about that, one thing businesses have to do is certify need. The other thing is they have to demonstrate that they spent it on, I guess, quote, appropriate, allowable things, which seem to have been mostly payroll and some utilities and rent for the business. Can you talk just a little bit about that, about proving that, what you should do to prove that?
Sure. So what I've been sharing with most business owners is to, number one, just be really attentive to documenting your expenditures. Certainly, if you use a payroll provider for your payroll, those payroll providers are providing reports specific to the PPP program to help you track all those expenditures, whether it's your cash compensation, it's your state and local taxes that you pay on your payroll. In addition, as part of payroll costs, it's both cash and non-cash compensation. So if you do provide some kind of retirement contributions to your employees, that can be included as part of your payroll costs. So making sure that you are able to document that, as well as healthcare type benefits that you provide. In addition, looking at, for rent, for mortgage interest, those sorts of things, just maintain your invoices, maintain your records of payment that you make during this period of time, so that at the end of that 8-week period of forgiveness, you'll be able to demonstrate and show these were the cash outlays that I made that relate to these expenditures. These are the these are the costs that were accrued during this period. So again, the documentation that's going to be required, especially for the payroll costs, is both, federal tax filings that you would make on a quarterly basis, as well as those payroll records that you maintain for your business. So, again, it's just really attention to detail in this particular instance to make sure you're capturing all that information.
All right. I stopped you before your third point, even though I have like 12 more questions, but because I know that's on everybody's mind. But what was the third key point? I'd asked you to make 3 points.
Sure. Yeah. So I just want to remind people that, one of the things that I think is a common misconception is that you can include independent contractors that you employ in your business as part of your payroll costs. The fact of the matter is that those were specifically excluded as part of the program, and that's going to come up when you actually go to request forgiveness. Is you're going to have to prove that they were basically W-2 type employees, and if you can't, then those costs can't be considered as part of the forgiveness process.
That's really interesting. Now, one more point that I heard somebody from the National Restaurant Association on CNBC this morning talking about the fact they had gone to the White House and said, look, you said we have to keep them on for 8 weeks, but looks like 8 weeks from the time this started, we're not going to be able to open again, or, we want to wait and see. Could you extend that? I think they said 9 months, actually. What's this deal with? Okay, at the end of 8 weeks, you have to document, and if you're paying people, but your restaurant hasn't opened up, what's the story with that?
Right. I think that number one, when the CARES Act came out, signed into law, I don't know that we had the visibility, kind of the time horizon that a lot of businesses were dealing with, and that really dictated that 8-week period was, hey, we want to make sure we keep people employed right now, without necessarily having that visibility about what was going to happen in the future. We don't necessarily get involved in the legislative component of the process, but I am aware of various legislators that are looking at different proposals to potentially increase the length of time that you can use the PPP funds for, as well as maybe change that 75-25% split between payroll costs and other types of working capital costs. But I can't really weigh in on what's going to happen on that front, but certainly there are discussions happening in Congress and in the administration. Yeah.
Well, there's one other misconception out there, but I spoke to the chairman of Wintrust on a radio show I was hosting, and he said there's still plenty of money out there, that a lot of larger firms had second thoughts because the rules on the back end and regulations or interpretations of the regulations were changing. So he said to me, this is a week ago, that Wintrust had plenty of money. Is there still money out there? At first, everybody said, I didn't get any, but we had a second tranche, and now seems to be money out there.
Sure. Yeah. Right now we have still about $100 billion in appropriations remaining. So yeah, certainly the round one went so fast, and people it was kind of like a run on getting your PPP application in and trying to get in that first queue, because we didn't know that there was going to be a round two necessarily. But in round two, I think we've seen that the lenders have exhausted their pipelines, and now we continue to market the program because it is going to be your quickest way to get access to financial resources when you compare it to any other SBA program, or probably any other program that local state governments are pushing out there.
I hope this isn't inappropriate, but it kind of reminds me of toilet paper. It's going to be back on the shelves now, but everybody had to run and grab it right away. Ed, you talk to people who run small businesses. Have you run into this thing where people are making more money on unemployment and they don't want, you run a small business, you're trying to keep it alive, you get the PPP loan and you say, great, you can come back. And the employees say, don't make me come back. I can't turn down the job offer because then I can't certify for unemployment. But I'm making more with the $600 plus the benefits, assuming you can get through the state of Illinois' insane mess, which is another story. What do you see on that score about people being willing to come back to work?
Well, a couple things. One of the things is I've got a handful of clients, business owners who are like, you know what, I'm fine. And I don't want to take a PPP loan because I feel like I'm taking it from somebody else, which you come to admire those folks, right? You're like, oh, that's a really nice thing that you're doing on behalf of others. When it comes to employment or unemployment benefits and balancing that out, you know, people can figure out really quickly, you know, just on regular unemployment, it's one thing, but if I get my regular unemployment plus the 600, right, I'm making more money on unemployment than I would working. So people will figure that out very quickly. And fortunately or unfortunately, that's just the way it is right now. So my talking with business owners and others who are on unemployment is they're like, you know what, I'm good on furlough, I'm good not working because I'm making enough money and I'll deal with it at the end of the 39 weeks or the shorter period of time with the $600 per week. So yeah, I mean, people can figure out the math pretty quickly, Terry, in regards to whether it's better for me to stay home and get this income rather than go back to work and get a lower wage.
But you can't say to the boss, no, 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 don't hire me back. I don't want to come, because then it's like you quit and you're not qualified for unemployment.
Here's what I'm guiding my clients on, or our clients on, and others as well, is that there's a lot of rules that are really important to follow. So for instance, you can't take a PPP loan and be on unemployment, right? You want to follow the rules. Just as you had mentioned, I can't stay on unemployment if my boss is asking me to come back. Technically, I can't do that. So there's a back end to this. So those who are in the gray space or just ignoring the rules, they're going to come after you, right? The government's going to figure out that you haven't done this, and they're going to ask for all that money back and then some. So, you know, staying in the lane and trying to follow the rules is really important. So if your employer asks you to come back, you can't quit and get unemployment. So you've got to follow those rules very quickly so that financial gain you have today doesn't turn into financial pain down the road.
Tammy, when people, it's hard to judge right now. Let me tell you all a little story that's not quite apropos of this webcast, but early on, I decided I should understand the terms of the stimulus payment when it first came out. So I wrote some columns and put some, I have a website, terrysavage.com, and I answered a bunch of questions that people wrote in, and then I was on a national radio show, and overnight, my website went viral. I mean, 250,000 people came within the space of 2 days, and it was picked up by Google as the place to go for Q&A, and I mean, it's overwhelming. And I have been introduced to a side of America that you will never meet in your small business loans or in your financial planning profession. And they are really in trouble. These are people who, the Fed chairman said 40% of the people making $40,000 or less are unemployed. These are people to whom that stimulus meant everything. And actually, they've given it to the poorest people last, the people on SSI, and asked them to register their children when they didn't have computers. It's just been a real mess for a whole tranche of America. Those people don't feed their kids because their kids got school lunches. Those people write with horrible stories of personal deprivation. I mean, I don't know where they were going to be anyway, but now they're in real trouble. So I see panic in a different level. Tammy, when people come into you, financial planning clients, are you seeing America's middle class having anywhere near? I mean, we see cars lined up for food banks. What do you feel out there?
I think I see both, and through the Financial Planning Association of Illinois, I've actually had the opportunity to do quite a bit of pro bono work, and so have had the experience of working with and talking with the individuals that you're referencing for whom this is not just an inconvenience or they have to decrease their expenses, but it's, do I pay an electric bill or do I feed my kids? And so that obviously takes this to a whole new level and really makes you think very broadly about all of the people that are being impacted by this. I would say from a client perspective, at least clients that I deal with, it's a much more just an uncertainty. It's not a, can I put food on the table necessarily? And that's expected from people that are typically working with financial planners, but it's more kind of what happens next and bigger picture. Are my kids going to be able to go to colleges that I'm going to be able to pay for? My retirement date, I was really hoping to retire in 3 years. Now, is that going to need to be 5 years or 6 years? Am I going to have the opportunity to work longer if I choose to work longer, given what's happening in the global economy? So it's those types of conversations that are on everybody's minds in terms of just uncertainty and what to do next.
In general, are you recalculating, just assuming the people still have their business at the end of this or their jobs at the end of this, are you recalculating retirement plans for people?
Yes, although usually when we run retirement plans anyway, we look at a number of different scenarios. And so clients have a sense of kind of, if there's just a status quo and you're continuing to generate income and put money away for the future, here's what that would look like if you ended up not being able to work and had to cut back on expenses, whatever the case may be. So we try to look at a number of different scenarios, even absent the whole pandemic. And so going back and revisiting some of that, I think is certainly helpful to people. And in some cases, it does need to be completely redone, but in others, it's just kind of a, let's go back and see where we were and how off the projections we are based upon what's happened.
And just one little more piece of perspective. What percentage, I mean, I know, I've known you forever. I know you do a lot of pro bono work, but of the general working people, the people that have jobs and still have jobs pretty much, but of the people that come to you, what percentage of them are not going to contribute now to their retirement plans because they have other financial needs? A spouse lost a job, or a kid, needs more money for school because doesn't have a job now. Are people cutting back on their retirement contributions?
I haven't had too much of that yet with people needing to cut back. And I always talk through kind of the pros and cons of cutting back, and to the extent possible, if they're in a plan where there's an employer match, it is so important that if you're going to cut back, to at least try to stay to the minimum amount that you need to get that employer match, because then you're just leaving money on the table. And at this time, we don't want to leave any money on the table. We want to try to get all of the resources that we can available to help support whatever goals that we have.
And your clients, I know you all work with a pretty well-heeled group of clients. And my question to you is, this could have happened to anybody. This could happen to an executive making $250,000 a year or more. So have people come to an absolute crisis where like two spouses lose their jobs and so forth? And how do you approach crisis management from a personal finance point of view, Ed?
Well, from our standpoint, it's the comprehensive financial plan, right? It's here's where we're at today, here's where we want to go. And that's why we call it financial planning, because life happens. And this challenge that we're all facing today is incredibly difficult. I mean, not only from a human side, but also from a financial side. So for us, we encourage our clients to have a spending plan. We've gone from just the typical spending plan, 2 paychecks, off you go, and so on and so forth, to the crisis spending plan, which is being absolutely ruthless in your spending. When the support checks all came out, I was being very vocal about, unless you don't have to spend those, keep those as long as you can, because we don't know when this thing is going to end. We don't know where the daylight is. So again, it is literally hand-holding clients, talking to them on a regular basis. Hey, are you okay? Is your family okay from a health standpoint? And then what do we need to do financially? And there's some clients out there that may not have wanted to take, let's say, Social Security to age 70 or age 68. Those are the conversations we're having today, because if you can't make ends meet, you need to make adjustments. So again, you don't want to make any adjustments that are permanent because you're in a panic mode or things like that. And that's why reaching out to your financial professionals and a certified financial planner to be like, okay, calm me down. What am I looking at? Here are my resources, and how do I get there? And that's where that interaction is so imperative, to make sure that you're not making a knee-jerk reaction in all of this emotionality.
Yeah, we've become a generation, or the next generation, I should say, has become a generation of do-it-yourself investors. Oh, we could trade online, we could do this, we could do that, until that moment of panic comes. Is that a big part of your role, just perspective and firm guidance?
It is. And so people generally, as you had said, are perfectly fine doing it themselves. This is where it's our most busy time, not only between current clients, but people who are seeking advice. Because again, when the economy is going well, the stock market's going well, people have jobs, hey, this is easy. And then when it's not, that's when that professional help comes in. So yeah, to Tammy's point, we're giving a tremendous amount of information away, because sharing that knowledge is important, but ultimately connecting with your professional circle is critical, especially before making some major decisions in your life and your financial life.
Well, I hope you're all submitting questions. I see we have some, but I want to just ask Bo one more thing before we go to questions, because we had some that came in before from our audience. Well, aside from the PPP, the Payroll Protection Act, the Main Street lending is just getting going. I heard the Fed chairman say today. What other ways can a small business in the Chicago area, presumably that's who's watching here, what other ways can they get money? I know the city of Chicago had a big thing that closed. They've started dribbling the money out. What is around if you're a small business desperate and PPP either was probably just not enough, or you couldn't use it for the things you needed?
Right. So what we're really encouraging people to do is consider consider working with their lenders to determine if there may be some other type of working capital loan programs that would be a good fit for them. We have the economic injury disaster loan, but we're not accepting new applications for that program at this point. So looking at those guaranteed loan programs that SBA conventionally supports, which means that the federal government is guaranteeing loans made by private sector lenders, is one great option because it's a very flexible. The 7A program is a very flexible loan program that can be used pretty effectively. So that's number one. Number two, as part of kind of a subset of the 7A program is the Express Bridge Loan, which again is more of a conventional SBA-backed loan program, but it's a streamlined process. If you're already working with an express lender, one of SBA's express lenders, you can access up to $25,000 in pretty short order with streamlined application.
Everybody's ears perked up. Where do you go to get that money in short order?
So this is going to be with a SBA lender, an SBA express lender, and you can find those through our website at sba.gov. But you can access up to $25,000 if you have an existing banking relationship with one of those lenders. And it's basically a working capital loan. It can term up to 7 years, and you negotiate those interest rates with the lender. So it's just one more way that you can access kind of bridge funds basically during this difficult period to get you into hopefully some bluer skies downstream.
Okay, let's ask our organizers. I think it's Troy. Can you pop up some questions? I don't see them popping up. And I'm going to hit a couple that came in by text a little earlier. And someone speak in my ear or out loud on the webcast and let me know where I'm supposed to look for those.
Yep. Terry, if you look at the drop-down menu on your control panel that says chat, all of our questions coming in are there.
Okay, hold on. I see that. Just a minute.
Hey, Terry, can I ask Bo a quick question?
Yeah, sure.
Hey, so Bo, with a lot of small business owners, oftentimes the line between the business and their personal finances is blurred. So a lot of folks seeking loans, are you or is the SBA, which loans are personally guaranteed and which loans are given to the company? So if the business ultimately does fail, unfortunately, what happens to those loans?
Sure. So for the PPP program, there is no collateral requirement or personal guarantee. So that's pretty amazing. I mean, typically we require some kind of personal guarantee or collateral. For the economic injury disaster loan, we do require collateral business on the business assets for loans of greater than $25,000. But it's general business assets. We're not necessarily looking for property or something like that. And the lack of collateral wouldn't preclude you from receiving a loan, but the personal guarantee on those economic injury disaster loans is only required on loans in excess of $500,000. So again, some flexibility that we're not going to come after your personal assets in the event that you do default. For SBA, like the SBA Express Bridge Loan, that would be something where we'd look at a personal guarantee. Again, it's only up to $25,000, so we do not require any collateral on that loan.
Okay, Troy, those aren't showing up, so why don't you, with your great mellifluous voice, just shoot out a question and we'll see who answers.
I can certainly do that. Our first question is, are the EIDL loans based solely on the number of people in the business? I am a sole owner-operator, but I've been offered a range of loan amounts to ask for, and it is being processed. Am I locked into $1,000 only? If it is more, is the first $10,000 forgivable?
Sure. So I want to kind of separate two parts of the EIDL program because I think it creates confusion. You have the economic injury disaster loan, which is a working capital loan with terms up to 30 years. And for that, what they're going to look at is the information you put into the system, your revenues, your cost of goods sold, to basically assess what your working capital needs are. And then they'll make a loan offer based on those working capital needs. There's also the economic injury disaster loan advance, which is a grant. So that's a grant of up to $10,000, typically based on the number of employees, $1,000 per employee. That is a grant. So you receive that, and that is that's basically, you know, your money to use per the guidance in the statute, which is, it's pretty broad. Most working capital uses, you can take advantage of that. If you receive you'll receive the advance in those $1,000 increments. That's what is basically the grant portion. It's not the first 10,000 of the loan. It's whatever that advance was that you received. The loan itself will be, again, a loan of up to 30 years term at 3.75% for small businesses.
By the way, the PPP turns in, if you don't, at the end, if you can't certify that you used it for the right things, doesn't that become a loan that's at 1%?
Sure, yeah, so there is, so I think it's important to know, based on the guidance that we received recently, there is up, you know, you can get up to 100% forgiveness, but there's also partial forgiveness also. So it's not like an all or nothing thing from a forgiveness perspective, but whatever portion is not forgiven does then term out for the 2-year term at 1% interest. But if you get full forgiveness, you won't pay any interest, you won't pay anything, because interest payments are deferred for 6 months in any case. So even if for what's not forgiven, you won't start making payments on that until 6 months from your disbursement.
And if your business just never makes it, at least you paid some people for a while, is that turn into a personal loan under the PPP program?
So it is not, there's no personal guarantee for the loan, but you're still, I mean, you're still responsible for repaying it to the extent that you can. It's not something that, you know, we're still going to look for you to repay it, right?
Well,
So,
they're also
yeah, sorry, Terry.
Yeah.
So just for clarity, Bo, so my business borrows PPP, right? There's no personal guarantee. My business goes under. Do I now need to declare personal bankruptcy to keep you guys from chasing me, or does it end with the business?
I don't know the answer to that. I'm not as well versed on that front as I probably should be. So
yeah, I know this comes up often. So small business owners are kind of, you know, wondering, hey, thanks for the money, but what's on the back end if this doesn't work out?
Right.
All right, that's something I'll have to write about. Troy, got another one for us?
Oh yeah, we've got a bunch. A real quick one is, can you post a link to the forgiveness application? I believe we should be able to do that, but I won't speak on behalf of our panelists.
On the BBB? Oh, well, was it on the SBA.gov website? Actually, BBB would be the perfect place for it because you can more easily deal with that than the SBA.gov. Okay.
We can definitely get a link up there too, though.
Okay, great. All right. Cool. Is there an Illinois BBB, SBA section of the website? You said SBA.gov, but is there an Illinois specific portion of the site? Oh.
There is. It's www.sba.gov/Illinois.
Perfect. That's where you'll find it. Okay, Troy, go.
Yep. This one was directed to Bo specifically, but any panelist feel free to weigh in. Bo, if the PPP is fully forgiven, will those expenses associated with the forgiveness be disallowed to be calculated as expenses from an IRS standpoint?
I believe so.
Sure. So currently, the IRS guidance is that yes, those expenses will be disallowed. TBD if there's any additional action from a legislative perspective that would change that, but for now, that is the case.
So the money wouldn't be wages then, it would be what? I mean, if you spent it?
Right, so the forgiveness of the loan conventionally would be considered income, right?
Right.
But that won't be considered income. You just can't claim the payroll costs as expenses, right? So it'll change your profit numbers.
Yeah, I've got one here that was texted in before. Some of this had to do with unemployment. So well, let's touch on that briefly. Let me make one statement. Except for Florida, there's no state as messed up as Illinois. I called the governor's office, I don't know, 6 weeks ago and said, it's going to be the Achilles heel, someone that knows him well. Could you please tell him? It's such a mess. I've never seen anything like it. And the new PUA site, besides its security breach, has been a nightmare because belatedly they said, well, you have to be turned down for traditional unemployment before you can apply for self-employed unemployment. The whole process takes forever. And I have tons of emails. I can't get it. I can't certify. They asked me to call a number to get a PIN and I can't do that. Nobody answers. They've got about 300 people in the call center and 1.5 million people last week when they put up the PUA site called. So having said that, can a sole proprietor of an LLC, these are ones you texted in, without employees qualify for unemployment insurance? That's anybody up on top of the unemployment situation?
I can take that. I think how it would work if you're self-employed, to Terry's point, you first have to, in Illinois, apply for regular unemployment. You have to be denied, and then you have to go through the second process for the unemployment for the self-employed, the PUA, and then you potentially will be able to get access to benefits.
Yeah, but please don't plan on buying food, groceries with that in the next 6 weeks.
Not anytime soon.
Theoretically, they should give you a lump sum back payment. But I talked to both the public spokesperson and actually got through to the director, who said, sorry, but we're just overwhelmed, and that's the answer. Troy, got more?
I certainly do. And also just a quick note to our panelists, if you look down in the chat, you can follow along with me as I read off these questions. Some of them are a little bit lengthy, so I just want to make sure people are following what I'm saying. Our next one is, why are payroll taxes excluded from eligible expenses for reimbursement?
Yeah, I don't know why they are not. So when you look at the payroll taxes, there's always like the employee contribution, the employer contribution. The employee contributions are eligible expenses. It's just the employer portion that are not. You can find that there's some clarification in the Department of Treasury FAQs on the PPP that discuss that specifically, what is eligible for consideration as payroll costs and for forgiveness.
Okay, Troy?
Yep, next one is, as an independent contractor, would healthcare premiums be considered a forgivable PPP expense?
If you're an independent contractor, are you getting PPP? That's the real question, whether you are considered a business, a sole proprietorship or an LLC. Talk about that. What about, I mean, we understand that restaurateurs we're given money to keep people on the payroll. Let's start both from the beginning about if you're a sole proprietorship, what can you get the PPP, and then what is it included as an expense allowed?
Sure. Yeah. So you can, as a sole proprietor, self-employed, independent contractor, receive a PPP loan. And if you don't have any employees, really what it's looking at is income replacement for loss in revenues due to the COVID-19. Basically, the standard calculation, if for example you file on your taxes, a 1040 Schedule C is basically your net profit, is what determines the annual payroll for 2019, which is used as your basis. And then you figure out an average monthly payroll based on that net profit amount, times 2.5 is the maximum loan amount. Now, from the standpoint of the forgiveness for healthcare expenses, there is an interim final rule that addresses sole proprietors specifically, and it does call out that those owner/employer healthcare contributions are excluded in that interim final rule. So it's kind of a weird dynamic where the employee healthcare contributions can be included, but the way I read it, the employer would be excluded from the payroll cost calculation and the forgiveness calculation.
So in other words, if you don't want to be, they said they weren't going to audit anybody under $2 million loan. Wouldn't that fall in the gray area probably for someone who's self-employed, sole proprietor kind of a thing? If you decided to use that grant money to pay your insurance, your health insurance, well, they're just going to come back at you later and say, what, pay that back or what?
Yeah, I don't know. I can't really assess what the risk is there. I think where you're gonna, it's really going to be working with your lender to sort through what they're looking for from a documentation standpoint and what they'll accept. Because really we're relying on the lenders to administer the program on our behalf in a lot of ways. And they're doing that initial review on the loan amount. And we've seen from the application side, lenders identifying, hey, you can't really justify the loan amount that you're requesting based on your supporting documentation. It just doesn't work. So, that's where I think you're gonna want to have that dialogue with your lender. And I think that just highlights a point that I did want to make sure that people, took away from today, is that having a business banking relationship is so critical, whether we're in these crisis times or not, so that you do have that relationship already established. What we saw was that businesses that did not have a business banking relationship really struggled to find a lender that was going to be able to take their application, just because lenders were trying to manage the sheer volume of applications that were coming through. So, and if you have that relationship, you have somebody you can talk to, right? And kind of say, hey, I want to make sure I'm doing this right, or whatever. So having that business banking relationship, that person that's kind of a strategic advisor on the banking side, is critical now, but it's also, if at some point you want to expand and you want to go get an SBA 7A loan or a more conventional loan, having that relationship is key to being able to make good decisions and to be able to access, programs and resources that maybe you might not otherwise be able to. So I just want to put a plug in for that.
Okay, well, I know a lot of banks are seeing this as an opportunity to build new business relationships with people that are coming to them for these loans. Troy got a couple more, and then we'll ask each of our panelists to give a final thought. So pick a couple of good ones.
Sounds good. I received money in round 2 of the PPP, but my request was very conservative and I actually need a bit more. Can I apply for another PPP loan?
Great question.
So you cannot apply for another PPP loan. The rules say that each applicant can only receive one loan. Now, depending on where you are in the process, if the loan has not yet been dispersed, you may be able to go back to your lender and explain why you would want to request an increase, but it would have to be documented. You'd have to have the supporting documentation based on the rules that would support that increase. It just can't be, hey, this is what I think I need. You have to have that documentation to back it up.
But before you go, Troy, I've got 2 personal finance questions here, and one for each of you, Tammy and Ed. Tammy, the one for you is, so what about estate planning? Have you seen an uptick? There was an article, I think it was in the Wall Street Journal, that estate planners, because of the fears of this general, confronted our mortality. Have you seen an uptick in the number of people who want to either first make a plan, well, all your clients already have one, or change them or update them? Do you see what's going on in the world of estate planning?
Yep, definitely. So there have been an uptick in people that have sort of been pushing their estate planning aside, making an effort to get that moving forward. There's also been, I think, both from a planner standpoint, but then also clients, to make sure that they have beneficiaries on accounts that maybe have been languishing, that they hadn't been paying attention to, or old documents or old trusts. It's been a good sort of house cleaning type of environment for going back and looking at all of this. I mean, this pandemic has been so striking in what it's impacting, who it's impacting, people getting sick that you never would have thought may have been getting sick. And so it's a good reminder for all of us to go back and look at the basic things that we all know are so important, whether it's your estate planning documents or, you know, your life insurance policies or your business policies. You know, make sure that you have the fundamental structure in place so that when unexpected things happen, such as this pandemic, you at least know that you have some of the basic things to help get you through whatever may happen.
You sleep better anyway. So do you quarterback
Right.
that? You have estate planners in your firm that will actually create the revocable living trust, or estate planning firms you work with?
So estate planning firms that I work with. So my business partner is actually an estate planning attorney. So we have two separate businesses. And so as that may make sense to have clients work with them or another attorney, but it is something I feel very strongly about as a planner, that before talking about investments or whatever seems to be a more hip or sexier topic, is to make sure that you have that sleep at night stuff in place first and then build from that. And that would go from your personal side as well as from the business side.
And Ed,
Yeah, if I can add one more thing, Terry, which is really important, because, you know, the vast majority of people are going to survive this, but for small business owners, the two essential documents, powers of attorney for property, powers of attorney for healthcare. And so if you're a small business owner and you get sick and you're in the hospital for 3 or 4 weeks, who are you giving authority to run to your business? So make sure at least those two essential documents, in addition to a will and a trust, is there, because that allows for continuity of care and the running of your business.
what about life insurance? No kidding. The premium's going to start to go up for new policies. The life insurance has been, especially term life, been a real commodity thing. But I mean, this could theoretically, especially if there's a second round, change the actuarial tables of life expectancies. Do you expect it'll be more difficult to qualify for or expensive to buy life insurance?
Well, not being an actuary or working for some of the major carriers, I can tell you that the cost of term insurance, as you have mentioned, is commoditized, right? And it's been going down. The tables are changing. People are living longer. This throws an element into that that's probably not necessarily foreseen. What this might have a bigger impact on are long-term care and long-term care policies and that. And so given the fact that that in itself, that industry has changed dramatically, getting an update or looking for a professional to help you update your insurance needs is really important, because again, because of this, things are going to change, right? Our view on certain things are going to change. It brings into view a little bit more of our mortality. So this, along with estate planning and a comprehensive plan, is critically important.
You know, long-term care insurance has been a hot button thing of mine for many, many years. And of course, then the insurers realized they didn't have the right actuarial tables, and people actually enjoying going into senior living facilities if they qualified to use. And we're not giving up their plans, they were using them. So premiums soared. Now they have the kind that's tied into life insurance, and that can't happen. Where I plug for long-term care insurance as perhaps even a business expense, because the C corporation can write it off. Do you see a lot of your clients now looking into that?
It's a balance, and here's the direct comment on this. Those who can really afford it don't need it, and those who really need it struggle to afford it. And that is just the truth of the profession, as I'm sure you'll be able to say. There's a lot of different policies. So the biggest thing I can guide on is don't be sold on something, right? Research, get a couple of different ideas. If you have a professional who's a fiduciary who works in your best interest, because these policies pay huge, huge commissions. And so you want to make sure that the policy is being presented fits your particular need and your particular budget, not from, you know, making someone's sales year because they were able to sell you and a couple of your friends those policies. So it's always good to review. We review it with almost every client just to talk about it. And typically when the costs and expenses come around, then we start to have to balancing long-term financial plans.
All right, now,
if I can just add one quick thing to that, Terry, I think also specifically when it comes to long-term care insurance, it's to go into it thinking about it as insurance like you do all the other insurance policies that you have in place, and not coming at it as sometimes it's sold from a place of fear, right? It's not if you don't do this, you're going to end up on the street. It is just one part, to Ed's point, of a comprehensive plan to look and see what will help you sleep better at night and where does this particular piece fit into that.
So Troy, I'm going to give you one last shot at a question and then ask all three of our panelists to come up with a closing thought of their own. But Troy, I figured there must be one that you're dying to ask. So let's hear it.
Yeah, I was actually going to ask if we have time for two. There's two really good ones, but I'll pick one if we're limited to one.
Nobody, you know, we're not, it's not like Channel 5 News and we're off the air. So give us two.
Great. I own a construction company and have employees on unemployment. Those on unemployment have been so since February before the pandemic started. I have not applied for PPP because I am not sure how these employees that have been on unemployment since before the pandemic will be affected by the PPP payroll forgiveness.
Here's a good question. Why would that? I'm going to add to that question, Bo. Why would this employer apply for a PPP loan? He's okay, more or less, and he can go on unemployment himself, presumably, if he's not, doesn't have any income coming in. He knows his employers are doing okay on unemployment. It would really shake them up. And he can only use a little bit of it for other stuff than payroll anyway, maybe mortgage or utility bills. Would that be a person who you just say to, you know, let your employees collect unemployment and hope you can make it through?
You know, I think every business owner has to make that analysis on their own of what's best for them and what's best for their employees, for sure. We get that question a lot as far as, you know, I'd like to take the PPP, but my employees don't want to come back because they're making more on unemployment than you know, coming back to work for me. So I think the benefit of, you know, potentially taking the PPP and bringing people back is that you've got your workforce ready to go. You don't have to worry about them finding other employment or doing something else in the meantime. You can keep them trained up so that when you are ready to roll, that you've got a ready workforce standing by and ready to go. But again, we don't advise businesses on what they should do. We just try to give them the information that helps them make good decisions.
Troy, you were right. That was a great question. Got one more for us?
I do indeed. What if we want an EIDL loan for over $25,000, but our lease does not allow us to issue collateral for our inventory or equipment, and our landlord won't waive that requirement?
Wow.
Sure. So the EIDL loan is, we do not, if you don't have collateral, that will not be a reason why we deny the loan. So, and that, nor would it limit the amount of the loan. So generally what we'll do for the EIDL is we'll take basically a general business assets type of lien, but you know, it may not even be first position on those business assets. And again, if you don't have supporting collateral, a lot of service businesses don't have really any collateral if they rent their place. You know, that's not going to be a reason why we wouldn't give you the loan. We're going to look at kind of the totality of your situation before we make a decision on that loan approval or denial.
Oh, did you say earlier though that you're not taking any more applications for the EIDL loans right now? What's the status of those?
Sure. So we stopped taking applications. We did recently reopen the portal, but only for agricultural enterprises. I think we had when we were initially open, we had about 5 million applications come in for EIDL loans, which is, you know, a huge factor over what we've ever seen in any other disaster ever. So we're trying to work through that and maximize the number of small businesses that we can assist.
When do you think that'll open again, and where do you get that money? Is that part of the things that the Treasury Secretary was bragging about today, and the Fed Chairman, about the loan facilities that they're going to, quote, stand up real quickly? The Main Street loan, nobody's mentioned even that.
Yeah, no, this is definitely separate from that. We did get an additional appropriation from Congress for, I think it was $50 billion for the Economic Injury Disaster Loan Program. But again, from a capacity standpoint, we're just trying to really process those loans as quickly as we possibly can. And that's why I say it may take some time to get these loans processed, which is why I'm encouraging people who do have these needs to look at the PPP as kind of a key resource, because you can get the funds in short order to help you in the near term, where EIDL, it might take some time to get it to you.
Okay, well, you've been a great audience out there. Thank you for the questions you submitted. And I think probably I want to go around and ask for one final word of advice. We know this is an audience of small business owners who have their own personal financial problems and issues. And would you, in the answering of this question, please give some information about where these people can reach you? This is not meant to be a commercial. I know that there are questions left unanswered out there. Thank you, Troy, for doing that. So, Bo, I'll start with you. What's the last key point you'd like to make? And then give us again, either your website or your contact information.
Sure, yeah. So again, I think that the number one program that we have available and a way that you can help both your business and your employees is through the Paycheck Protection Program. If you have not applied, I really encourage you to explore it and see if it might be a good fit for you, because it is, without question, the quickest way to financial resources for your business in the near term. So again, if you have more questions, we're doing a lot of work to educate small business owners on the program, how it works, all those sorts of things. And you can reach us at illinois.do@sba.gov.
Wait, that again? It was sba.gov/Illinois or what?
This is our email address where you can reach the Illinois District Office directly. It's at illinois.do@sba.gov. So we can definitely get you additional information. If you have specific questions to your situation, we can also try to help you navigate those as well.
Okay, and Tammy, what thought do you want all these people out there who have spent their time with us today to carry away, and how can they reach you?
Yep. So I would say, as difficult as it may be, to really take what you have already learned from this experience and determine what you can do better going forward. So, for example, for many small business owners, myself included, we are so involved in working in our business, we're not necessarily working on our business. And so if applying for the PPP, the EIDL was a record-keeping nightmare for you because that's not something you focus on and you're not hiring somebody to help you with that, maybe it's time to take another look at that. And when lending does pick up again and your business is hopefully going to be moving forward, you may need to apply for more loans. And the more proactive you are and organized you are with your own cash flow information, both personally and professionally, that's only going to help you get where you need to go to the next level in terms of accessing resources for working capital, whatever the case may be. So that's the first point. I think the second point, just in terms of reaching out, and I can certainly provide my contact information, but I want to make a plug for the Financial Planning Association's Pro Bono program. And so you can do a search for Financial Planning Association Pro Bono, and there are a list of certified financial planners across the country who will provide short-term financial planning advice to you, both personally and professionally. And I think that could be a great resource for someone who just needs to get a few questions answered and is not necessarily looking for a long-term financial planning engagement.
That's the FPA.org website, is it?
So you could go to Financial Planning Association and a Pro Bono. I think if you do a search, you'll be able to find that. I don't have the website with me, or we can get it out to everybody. And then there are some individuals there. If you are looking for a certified financial planner to assist you, not in a pro bono capacity, you can go to plannersearch.org. Again, that's plannersearch.org, and you can search for certified financial planners in your area that may also be able to assist you.
I mean, not fair. They want you now. So what's your...
Oh, sorry. Right. Yeah. So my office is in Lincolnshire. It's RW Financial Planning LLC, and my website is rwfinancialplanning.com. And you can click on a link there to contact me, or my email is twener@rwfinancialplanning.com.
Okay. I always want to make everything useful, and this isn't TV, so there's no commercials. This is your commercial. Ed, you came to me 3 or 4 weeks ago and said, let's put something together. It was a great idea. And you all do credit to you. You're going right to Steve and brought Tammy in and Bo in. What a great program. What is the thought you want to leave everybody with?
So first of all, thanks for doing this, everybody, because taking a time out of all of our busy schedules and sharing some good advice is important. I think first and foremost, I try to guide our clients to take a step back, right? Take a breath, right? just take care of yourself physically and mentally, because if you burn yourself out, your business is useless. So make sure you take care of yourself even under all of this stress. Find something. Second is to make sure that those around you, from a business capacity standpoint, your financial professional, hopefully a CFP, your attorney, your tax professional, your banker, rely on them for as much information as you can. And I think to Tammy's point, these are important things, because what I'm finding is when I'm talking to people about the PPP loan and other loans, they're like, I don't have a banking relationship or a strong one. I'm like, well, that's something to now work on in the future, because when times like this happen, your banker is actually your friend, not your enemy. So again, just greatly appreciate the opportunity and all of your input on this panel, and persevere. Right, so we'll get through this, and so as Terry had mentioned, there's a lot of people who are suffering, and whatever we can do to outreach and to help, by all means, you know, that's why we're here.
And how do people reach out to you?
Very simply, you can email me, ed@mactrax.com. MACKTRACKS.com. ed@mactrax.com is the easiest way to get a hold of me.
Great. And I will say that if you want to read my stuff, the columns that are syndicated, sign up for my free newsletter, which I write when I'm in the mood, and I've been in the mood a lot lately. Just go to terrysavage.com and you can post questions on my Q&A blog there. And now I'm going to turn it back over to Steve. Steve, the BBB has done just what it's supposed to do, really, really help people today. Thank you for sponsoring this and organizing it. And particular thanks to Carly, who put it all together, did the work.
Thank you so much, Terry. Terry, there's so much information that we provided today, such valuable information. Again, the Better Business Bureau's mission is to educate businesses, to help them. We've been doing this for over 100 years. We want to thank everyone for attending today on behalf of the BBB. What a wonderful webinar, such insightful information. We want to remind everyone that if you have additional questions or you want their email addresses, to please reach out to us at questions@chicago.bbb.org, which is on your screen. We'll follow up with the panel and we'll directly email them to the proper expert. A special thanks to you, Terry, Tammy, Ed, and Bo, for taking the time out of your busy schedules today to help us out and to help the audience members out, which is the Small Business Bureau, small businesses rather. Also, thank you again for being to the Financial Planning Association, who's a great partner of the BBB. We'll soon issue an ebook on financial planning in cooperation with the Financial Planning Association to help you in your financial planning needs from the Better Business Bureau and the FPA, and identify resources and links to help you find a professional. We will email everybody a copy of the ebook as a thank you from the Better Business Bureau for joining us today when it's ready. We will also send out a survey at the end of this webinar to please provide us valuable feedback to the BBB as we do additional webinars to help small businesses. We will also provide you a link to this video, which has been recorded today, so you can watch it again and go over information that was shared today. Again, on behalf of the Better Business Bureau, I want to thank the panelists and thank the audience members for attending today. Very, very wonderful webinar. At this time, the meeting is over. You may leave the webinar. Thank you.
Thank you.
Thank you.